Right. Ahoy there, traders. How are we doing? We've got the early attendees, the hardcore crowd. Hello, hello. I think I've got everything. Everything's ready, I think. Yes, we're recording, which is good. I've got my scribble stick. Yes, there's the scribble stick. Cool. Right. So looks like everyone's logging in. Hello, Val, Ian, Glenn, Nick One, Steve, Scott, Vito, Zeke, of course. Looks like the band's all here. Everyone's just coming in. So how's your week been? How has your week been? Mine's been pretty decent. Crazy week. Good crazy or bad crazy, Glenn? Sometimes it can be a good type of crazy. Excellent. Hello. Right. Let's get a rocking and a rolling. All the gears are in motion. So, welcome again, as always. Thank you for your time. I usually say this at the end, but nonetheless, at the beginning, we could all be doing other things with our time. So just want to show some appreciation for deciding to spend it with me for the next hour. So thank you very much for that. So the narrative that I'd like to kind of talk through this week as we look through the markets and stocks and opportunities is, are we making this needlessly hard? Far too many people make this trading thing a little bit more difficult than it needs to be. Myself included, when I started out, I made it unnecessarily difficult, just like the word, the phrase, it's unnecessarily difficult to pronounce. But nonetheless, we all do it at some point. But I think what's different from the people who are starting to see results compared to those who just never see anything is that they continue to make it unnecessarily difficult. And there's a few things that we can do, which I'll talk through today, that will make it a little bit easier. Again, it's not that trading is easy. I'm never going to lie to you and say that trading is easy, because let's face it, it's not. If it was, we'd all be doing it. But we can make it more streamlined. We can make it a simpler process. And that's the key word there, a process. And the people who have a process and formulate a process will start to see results. And the phrase that I was turning around today is, it's essentially most traders start with a disorganized chaos, essentially. And what we want to do as traders, the ones who see results and consistent results, is they turn that chaos into consistency using rules, using a process and methodology even to make it work. So that's what we're going to be looking at through today's session. And we can see that everyone's starting to log in. So it looks like we're all here. Let's get rocking and a rolling. If you're new to these sessions, the way that we go about doing it is we talk about the charts for a wee while. I'm going to spend 2 minutes just introducing myself. In case you are new, we're going to look at the stock market. We'll have a little bit of an overview. You might have noticed there's a few weird things going on in the world that is having an impact on the markets. And we're going to be talking about the turning chaos into consistency direction. If you are watching this on the replay, pop a comment. They typically get hosted on YouTube, but the way to get most out of these sessions is to interact, like, comment, share, ask questions. I've got the chat box open on my other monitor, and you'll be able to ask questions. If it's relevant, I'll answer it in the moment. If it's not, I'll just save it for later on. So if you've got a question, just pop a comment and we'll get to it when I see it. So quick intro, if you are meeting me for the first time, hello. I'm just a regular guy. I'm not going to blow wind in anyone's sail and say that I'm a highfalutin Wall Street guru, because I'm not. I'm just a simple guy who found some success. I like cake, coffee, long walks, spending as little time as possible zombieing out, flicking at charts, and strangely, I like flamingos. I've been trading since the mid-90s, and for the last 20 years, I've been helping traders like you become better traders, essentially. As I just said, I'm not a Wall Street guru. I'm just a regular guy who figured a few things out. The only thing I can give you is the benefit of my practical in the trenches experience. I am very appreciative and fortunate to have figured it out early on. I had favorable market conditions. I look back on it and think about when I first started out. There was exceptionally favorable market conditions when I went full time. It allowed me to make some mistakes and have some inconsistencies when I started out. And it was a forgiving market. There was a little bit of elevated volatility back, so circa 2001, 2002, you might remember that little dot-com bubble popping. So a little bit of the tail end of that. And again, it was just, again, favorable market conditions that allowed me to make a few mistakes, kind of like what we're seeing now. We've got favorable market conditions, we've got wide swinging markets. It's a little bit forgiving if you press the wrong button. You can recover from it reasonably quickly. So we've got good conditions to learn in. So I can give you the benefit of what I did and what I do and the journey that I've taken so that you don't hopefully have to learn by trial and error. Legal beagle stuff, I've got to say that past performance is no guarantee of future performance. What I will do is I'll show you that it does sing from the same song sheets and we can prove that essentially. Process I use is, or I refer to it as a production line. It's by intention. It should be simple to replicate and get results. And I want it for me first. I want to be able to replicate and repeat my own successes. I want to be able to do the same thing today, tomorrow, next week, next month, next year, because it's consistency and application of any strategy in any business that creates success. If you think about it logically and simply for a moment, if you had a business on the high streets and you decided to sell women's clothing one day, men's shoes another, you decided to sell fidget spinners next week, it would be a recipe for disaster. There's no planning, there's no strategy, there's no consistency that allows you to start to see the types of results of running a business. And trading's no different. We need to have a single point of focus, have consistency, and you will start to see results. Money is a byproduct of process. So just keep that in mind. It's not unique to trading. It's just how we live life. For some reason, as soon as we step into the trading world, people forget that and it goes out the window. I've helped thousands of traders just like you plug into the tried and tested system that I'm going to explain to you in a moment. Because it works, it gets results. It's what I use myself. It's what I teach all my students. And if you'd like to stick around for the next hour, you'll get a reasonably good idea of what I'm doing. Just like Emily, just like Joe, just like Anik, just like Kyle, just like Colin, just like Randall. Thank you, Randall, for your kind words, and lots 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 of students who get results, who tell me that they're getting results. Of course, I get my own results as well. I generally post what I'm doing as I'm doing it. I've got a nice bit of software to help assist all of my students see what I'm doing as I'm doing it. And basically it works. We've had some great results in which we'll go through in a moment. We've just cashed out several positions, but ultimately I refer to it as a production line for a reason, and it's by design. It's a rule-based system that allows me to plug into the markets. It's proven, profitable, repeatable, and it should take 20 to 30 minutes just a few times a week with the way that I approach it. And that's one of those dials that you can turn. If you want to speed things up, you can take the same process all the way down to day trading if you choose to. I don't want to. I spent 12 years doing it. I did it for 6 to 8 months. I can't remember how long it was. It all blends in during the lockdown. I had nothing else to do, just like everyone else. But you can speed things up or you can slow things down accordingly. Again, it should be a process that you can just turn those dials to kind of fit it around your requirements, your lifestyle. Again, I want to spend as little time as possible zombieing out in front of the computer. I don't want to do that. We've all done it, but having 2, 3, 4 hour sessions flicking through chart after chart after chart, it's silly. Let's face it. It is silly. It's not productive. It's just unnecessary. So we want to be able to plug into a process, plug into a system, find an opportunity, and then go and enjoy ourselves. Now, before we actually dip into the charts, what I've started doing with some of my accelerator students is just posing a few questions. Last year, at the end of last year, I started to ask the question of myself. Sorry, at the beginning of last year, I started to ask this question: are we living our best life? I think we've all had a reality check because of the COVID nonsense and current affairs. It just puts a lot of things in perspective. I had this for myself back in 2001. If you don't know, I had a near-death experience. It's something that I live with. I have Crohn's disease. I have the Grim Reaper standing behind me on a regular basis saying, just give me that nod. Is today or this week the time? So I'm very conscious that we've got a very short time on this earth. So I want to make sure that I get the most out of it. So are you living your best life? Again, just coming back to that, spending 2, 3, 4, 5 hours looking at charts or procrastinating at whatever bullshit that you're procrastinating over, just get over it. If you're procrastinating, you probably don't want to do it, so don't do it. If you're just zombieing out, flicking through chart after chart, you've not got a process. You need a process. If there's something that you want to do and you don't want to, do you want to get to the end of your days and be regretting things? One of the things that got me through my own recovery, if you'll just indulge me for a moment, is a simple question, and it had such a profound difference in the way that I started to perceive life. I was one of those people that would always be, I wish I could get a leg up. I wish I could kind of have some help. I wish I could have, is that kind of, I want to, but never actually do anything about it. I went from that person, and probably like most people, it was fear of the unknown, fear of the uncertainty, fear of failure that's holding you back. But that near-death experience, there's nothing more motivating than having a priest stand over you, offer you the last right to go, if I get a second chance at this, I'm going to seize it by the horns and pull that steer in my direction. But there's nothing more motivating than that. And the question was, it's better to have tried it, also the phrase, it's better to have tried and failed than to never have tried at all. And I think we've all had that realization recently because of everything that's going on in the world. To have a different understanding of that phrase. Again, I had my own personal lockdown for 3 years back in 2001. So it does genuinely mean something to me. So that's what I would pose to you. So are you living your best life? Are you taking advantage of the opportunities that are before you? And recently I've been thinking about this question again. So what I'd pose to you is 3 broad stroke questions. Now we can look at the business side. So it doesn't have to be stock. It could be business. It could be, what is the business that you're in? What are you pursuing from a business point of view? How are you creating financial security for yourself? That's what we're going to focus on in this session. But I would also say to have a balanced life. And I don't believe in a work-life balance as such, where you've got to have so many hours doing this and so many hours doing that. But it's all one life, but it does need to be in balance. And what we don't want to do is spend hours and hours flicking through chart after chart, looking for stocks or business opportunities or ventures, and never really pulling the trigger on anything, just mindlessly fumbling about. So get focused on your business. My business is stock trading, so I would suggest to you, get focused. To help with the balance, what curiosity you want to feed the mind. It could be reading, it could be education, there could be YouTube, but I would feed the mind essentially. And that's the curiosity side of things. I like to try and have a childlike mindset with most things. So if something catches my attention, pursue it. Take advantage of that. And then finally, what fun thing are you doing? If you're not having fun, if you're not enjoying yourself, if there's no ice cream involved, what fun thing are you doing? Just make sure that you've got some balance in your life. And I try and have, touch these things every day. I didn't realize I was doing it, but it's something I've done for years. I'm trying to pursue the business mind. I'm trying to keep my intellectual curiosity, curious, and I'm trying to enjoy myself. And it could be simple things. I like going for long walks. I work out every morning. Before I even do anything, I have my schedule set up. And I appreciate, it's not going to happen overnight, but you can change things. Go to sleep an hour earlier, get up an hour earlier, have an hour to yourself, go for a walk, exercise, feed the mind, feed the body, feed the soul, and then work on business. Because otherwise, what's the point of doing it all? Quick example is, again, January's been great. I had a whole month of celebrations. You know, September, October, November last year, been doing the same thing. I like enjoying myself. I like going out. Yesterday, for example, I went to the zoo. As I said, I like flamingos. The flamingo enclosure is quite nice at a local zoo, but we were very fortunate to get some close-up shots of the jaguars, and these are amazing. And what I've mentioned this before, but it literally passed right in front of me, and you've got the same markings on the black jaguar as the spotted patterns jaguar. It's just that they're both the same color. It's quite an amazing sight if you can ever see it. It's almost like your eyes can't focus on it. It's quite jarring and disjointing, but nonetheless, I can enjoy myself. So that's what I would suggest to you and each and every one of you is, like, don't be locked into trade. I'm going to give, quite literally, I'm going to give you my system in just a moment, so you don't have to worry about how to trade. I'm going to give you a list of stocks in a moment so you know what to trade. You've just got to go and bloody well do it. You know, for most of you, looking at down the name list, most of you have been following me for a long time now. Are you doing it? You know, I can quite literally post I have done several times over these sessions in the past couple of years. I can give you my list of rules, and few people are going to do it. You know, it's kind of boggling. It boggles the mind, I've got to admit. We're all looking for that way to make money. I give you it every week. Just go and do it. And then that's going to free you up to have fun, to enjoy yourself and go and do other things. Anyway, that's my little motivational pep talk. With that said, let's go and look at the charts. In fact, before we do, we've got a few trades to review, actually. So we'll look at the charts, but I've got some slides as well. We'll look at Thursday, Friday, and early this week. We've closed several trades. We're going to look at them. Broker statements on the charts. Energy sector. We spoke about the energy sector September, October last year. I showed you what I was trading, how I was trading it. Quite literally, buy the dip, buy breakouts. WMB stock. Again, these are 64% return on capital, 277% return on capital, 228, 293% return on capital. Again, what I'm trying to demonstrate is like it's not the money. I mean, I actually give a lot of what I make away. It's the consistency of like a process. When you've got a process, you make money. 483%. PayPal's been amazing. 299% on Triple M. This is a break-even trade. They don't always make money. I got lucky. It wasn't a small loss. It was a small profit, but nonetheless, it's a break-even trade. Just because I decided to close the trade in the afternoon instead of the morning. You know, simple things like that. Anyway, let's go and look at some of those stocks in a bit more detail as we eventually look at the charts. So the trades that's recently closed, again, PayPal. Again, why PayPal? You know, we spoke about this previously. You know, one of my 6 money-making patterns is breakouts. I spent 12 years just trading these particular setups. Identify consolidation. How do you do that, Phil? The average prices cross at least 3 times in a short period of time, 3, 6, 9 months. Just pick a time period. Doesn't matter. Prices flipping and a flopping. The 20 and the 50 is flipping and a flopping. Okay, there is your consolidation. Okay, great. Draw a big box around it. Wait for the breakouts. It continued to consolidate for a wee while longer. And right here, there's the breakout. Didn't really give me an entry that I liked. I've got what I call a time-based retracement. That's just a fancy way of saying it went sideways. So it went sideways, broke down, and we get our entry here. And it quite literally just took off to the races. So from $180 down to $100, there's a nice $80 move there. A nice $80 move there. This is PayPal, Glenn. Let me pop the watermark on for Glenn. And for anyone else who's wondering which stock it is, thanks for reminding, Glenn. Again, I don't like having them on. I find it quite distracting, but at the same time, presenting today. So again, thank you for the reminder. So the point is, it's a breakout, it's a pullback. Sell, in this case, sell the first pullback after a breakout. That's it. That's all you've got to do. That's all you've got to do. Sell the rally in a downtrend. Sell the first pullback in a breakout. It's the same thing. It's just we're going to phrase it differently because it started off as a consolidation. Now that it's trending, I'm going to refer to it as sell the rally in a downtrend. So I'm looking for a sellable rally in a downtrend to get repositioned. Absolutely, Randall. Yeah, we did have that stock in one of our group sessions. Yeah. So this is one of the, just looking at the data, it's one of the first stocks that I took on this year. Again, I didn't get the first push out. That's okay. If you're going to see a sustained move, you're going to have multiple opportunities. So don't worry about if you miss the first one, you'll get the second one. Again, it didn't give me an entry as per the rules that I use. Thinking about targets for a moment. It's in a range, height of the range, deduct that from the breakout. It's going to give you a target somewhere around there. Again, back of the envelope stuff. It's nice and quick. You should not be spending hours doing this is the point I'm trying to get to. If you're spending hours doing that, it's wrong. Or you need more definition on what you're doing. You need more rules to get rocking and rolling. And make sure you close out at targets. Again, I don't know if it's going to go further. I don't know if it's going to retrace. I've got a process that works. Again, let's go. I think it was WMB is the small profit. So I've got a small profit on WMB. Again, it's not that it was incorrect. It's just the management rules that we have are allowing us to take small profits, or certainly not take whatever small profit there was and not let that turn into a loss. I don't know if there's going to be a deep retracement. I don't know if the war is going to create a huge sell-off in the market, a knee-jerk reaction, which is what we're experiencing right now. All I know is that if I apply a simple process with rules that are time-tested and proven, then I should make money. Again, I don't know if I'm going to make money on this trade, the next trade, the last trade. Again, in the end of January, I had an expiration cycle where some of the trade ideas that worked out cost me about $6,000, $7,000. As you saw in some of the slides, one trade picks all those losses back up. So it's certainly worth having a simple set of rules. Anyway, we're getting past the point. Triple M. So what's going on here? You've got a small consolidation there, not really a big deal. Average price crosses over. This is our classic trend. Again, a little bit of a push, pullback, push, pullback. You've got multiple opportunities to get positioned on a sell the rally in a downtrend. So we've got a lot of bearish trades which have run to conclusion. Marriott's Hotel, again, was another one that, again, it's not quite behaving in a favorable way. The movements are tiny at the moment, and that's okay. So I've got to manage for a small profits or a break-even trade as per the management rules that we apply. Again, run, sun run. Again, you'll start to see some familiarity with some of these patterns. This started off as a range reversal. We've got the breakout. So convert the range reversal into a breakout. Again, then we're now back to trending. So as we're seeing price rally, we could have a sellable rally in a downtrend. The energy sector, there's multiple trades in the energy sector. We've got Halliburton. We spoke about this for most of last year in these open sessions as a good trading vehicle. PXD is running nicely. Coop has been selling off quite nicely. MRO has been selling off quite nicely. All of these trades have gone to targets quite nicely indeed. So the point I'm trying to get to is, again, not to thump my chest and say, look how great I am. Don't mistake me for being that type of person. What I'm trying to get to ultimately is when you've got a simple process, rule defined, it allows you to find opportunities with consistency. So the first thing that you want to consider is look at a small group of stocks. I have 89 stocks. Again, we're focusing right now, and in most of the time in these sessions, I'm focused on 15 stocks. Just look at a small group of stocks that are proven to behave in a way that is favorable for the way that you want to trade. I like to swing trade. I like to capture the big moves. It allows me to do things like yesterday where I can quite literally just unplug. And while war was breaking out, I'm enjoying myself at the zoo because it doesn't matter to me what's going on in the world. It sounds a little bit crass to say that, but that's an unfortunate truth. It is of no consequence what is going on geopolitically, economically, when you've got a group of stocks that behave in a way that is favorable to the way that you want to trade, then it doesn't matter what's going on. And here's the proof. We're looking at the S&P. This is the top 500 stocks. It's on the futures. I've got 20 years of data loaded. And the way that I want to trade, I'll just recap the rules in a moment. But if I buy the dip file, let me do that now. Actually, let me recap recap what I'm doing. So what I'm trying to do is, if I've got the 200 period, the 50 period, and the 20 period moving average, when they're stacked on top of each other and price is above all three, at least two, but ideally all three, then I want to be able to capture those times where price is above the moving average. Again, it doesn't always work. You can see that there is a monetary loss there. There's a little bit of a monetary loss there. But what I'm trying to do is capture those times where price is trending favorably. I call this a phase 3 trend. Avoid the times where price is retracing or between or below the moving averages. And right now, avoid it where price is doing something a little bit funky and a little bit weird. So I want to be able to capture the strong moving parts of price movements. And just by applying that base criteria that I've just outlined, I can plug those rules into an algorithm and look back over the last 20 years and say, if I'd just done that in the last 20 years, what would have happened? Great. That's my interpretation of classical trend. And as you can appreciate, there's a little bit more to it with money management and rules and a few conditional things. But the point is they're quantifiable, and they're quantifiable to the point where I can say, okay, well, if I wanted to, I could let the computer trade this. Like, I've got to admit, I'm not personally there yet. I can't release it. I can't release everything to the computer. But even if we're manually doing this, it's not time intensive. And this is what a positive expectancy strategy looks like. And that's a fancy way of saying, does it make consistent money? Do we have a nice steady equity curve? Yes, we do. Great. It's on the stock market, so we know that it should be able to be used on a wide variety of marketing instruments. And this is what gives me confidence to place trade. This is why I'm looking at those top 15 stocks are the best of the best of the best. They've got these wonderfully steady equity curves. That's what the top 15. So when you've got a proven strategy and you match it up with stocks that have a tendency to behave in a way that is favorable for that strategy, that's what you're looking for. So it's not just about the strategy. It's not just about the stock. It's when you match the two things together that you have something special. And it doesn't matter whether you're using my strategy or someone else's strategy, but you do need to find a strategy that is suitable for what you want from trading. And making money is not what you want. Making money is a byproduct of the process. So for example, what I want from trading, I want low maintenance, high rewards. I don't want to be spending hours doing it. I want to be spending minutes doing it. I can do this 10 to 20 minutes, 2 to 3 times a week. And maybe when you're learning this, it's going to take 30 to 45 minutes, 2 or 3 times a week. But you should not be doing this every day for hours at a time. If you're doing that right now, something is broken. Something is wrong. You've got chaos in your trading, because if you know exactly what you're looking for, then you're just waiting for it to happen. Just like, let's use our business metaphor. If you started a business on the high streets or bricks and mortar or real world business, you're going to have a system, a process. You're going to have standard operating procedures. You're going to hire employees to run those standard operating procedures. You're going to have a till person, a warehouse person. You see where we're going with this? You've got a list of tasks that you want that employee to do that will help contribute towards business success, business profits. Simple things like opening at 9, closing at 5, having a till person, having a float in the till, having stock on the shelves, having a small range of products on the shelf, because maybe you're a ladies' clothing boutique, maybe you're Apple's iPhone store. You've got a few products on the shelf. You're not trying to sell fidget spinners. And you're not trying to sell one thing one day, another thing the other. You're a focused specialist on one type of product or a small group of related products. So that's what we're trying to do. We're not doing anything different that every other successful business in the world does. We're just doing the stock market equivalent of having a business. And I think that's what makes most people overcomplicate this. Just coming back to the narrative that we were talking about, it's so easy to overcomplicate this, and it's truly not difficult. The hardest part about this is finding a process that is suitable for you, finding a process that makes sense, and then finding a process that is replicatable. And unfortunately, there's a lot of people who are similar to me where they want to help traders, but their strategy is very discretionary. It's not that it doesn't work. It doesn't work for most people because there's a lot of discretion involved. I'm trying to remove that from my own trading, which means it's great for you because it should be easy to replicate. When you learn the rules, and when you've learned those rules, all you've got to do is follow the rules. That's it. That's all we're doing. So that's what comes about with these list of stocks, a small group of stocks that behave in favorable ways for swing trading. The swing trading, the moving averages are in the right direction. So this is LNG. Just a quick illustration. So LNG, because the watermark's just in the background, nice steady equity curve over a 20-year period. I'm going to include this in my universe of stocks to trade because it's not giving me any indication that this is a horrible stock to trade. Example of a horrible stock. Let's use my favorite donkey, Pepsi Cola. We all know that Pepsi Cola is a good company. It has great dividends. It's a good, well, if you like Pepsi, it's a good product. It sells globally, but it doesn't behave in a way that is favorable for my style of trading. So this is it's not that I can't make it work. It's just that I can't put the autopilot on, essentially. I can't let the Tesla computer drive the car. It's going to need something extra. I'm going to have to be in the trenches. I'm going to have to be involved. I know I can make this work. I've traded Pepsi before, but I've added my discretion, my opinion, my viewpoint, my 30 years of experience to find trades. That's not good for you because you can't replicate my experience. It's my experience. No one else has got it. So how do we do that? So that's why we have rules. Is this resonating with them? Glenn, I've just seen your question. Is this resonating with this hopefully just illustrating the importance of a rule-based approach? It removes the chaos and introduces order and consistency. And if you've got those things in any business, you should have profitability. That's what we're looking at. So, does it work on natural gas? Let me just find my natural gas future. I can't quite remember the ticker. I think it's H. Yeah, no, that's you remind me the ticker for, I can't remember. There's so many tickers in the world. Do events come into play? No, I don't look at them anymore. I can't remember the name of natural gas, if I'm going to be honest. Someone give me a hand here. UNG. There we go. Well, it's NG, isn't it? Oh, that was hard work. Okay. So natural gas. This is the ETF for natural gas. Let's look at the futures actually. Symbol is NG, of course, natural gas. So we're looking at a 20-year, since 2001 is where I've got data back to. Initially, was a little bit of hard work, but we can see that there is a steady equity curve. So yeah, is natural gas worth trading? Yeah. You might have a little bit of periods of time. I would imagine just because there are, 5, 8, 10 trades, the numbers across the bottom are trade numbers. I would imagine there's periods of time where natural gas consolidates. So obviously if in a consolidation, it's not favorable for trend trading approach. So that can be avoided with the rules that we use. It's just I can't program that observational analysis that we do, that we weave into, the visual confirmation. I'm expecting a trending setup. Is it trending? You can filter those out manually. And that's why I trade manually, because, a little bit of common sense approach, we can make that equity curve even steeper just with the way that we approach it. If you want to trade this with my preferred method, you can do it with the ETF and you can use UNG. So this is the natural gas. Again, this only goes back to 2007, but we can see that it's nice and steady. To answer your question, to be fair, Glenn, you tell me, is it worth your time and effort and energy waiting for classic trend trading setups on natural gas? Cool. Nice and simple. Nice and simple. So let's apply the same logic with bonds. Should I apply a classical trend trading approach to bonds? I'm going to use TLT, which is the ETF of bonds. In fact, let's go to let's look at the 10 and 30-year bonds. So this is the 10-year notes. So should I apply the same effort and energy on the 10-year bonds? Actually, that looks pretty decent. That looks pretty decent. So can we apply that to bonds? Yeah, looks like a great deal. Let's try the 30-year. So is my interpretation of classical trend trading suitable for bonds? Great. That means that. So all I'm trying to do is validate it on the individual ETFs, because TLT is a composite, it's an ETF of both those bonds. So I just wanted to look at them separately, because the ETF wasn't looking great. It was what I call half and half and a big spike there. That's concerning. It might just be an anomaly. So that's why I wanted to look at the, that's what, so TLT is the ETF of bonds, but it's the ETF of the 10 and the 30-year bonds. It's like composites. So it's not that bonds aren't worth trading. It's just that maybe the vehicle to trade bonds is not via the ETF. That's what we've just learned. It's not that it's not profitable. It is profitable. It's like, this is what I call a dinosaur back. I'm trying to avoid that bullshit there. But when we go to the futures, it's like, actually, it doesn't look too bad. So maybe the vehicle to trade bonds is not my personal first choice, which is to use stock options and ETFs. Maybe we can go to the futures and trade it via the futures, because the future looks like it's a vehicle that behaves more favorably for my style of trading. Now I know something. I'm not going to blindly trade TLT via stock options with my preferred style of trading. The better play would be to look at options. And my apologies, not options, futures. So one of the things that I like to consider with this is, because we've got a nice steady equity curve on futures, I know this is going to give me less of a headache trading. It's no guarantee that the next trade's going to work. What it's giving me the confidence with is I can trade this chart consistently. I'm going to take every trade that's set up with impunity so that I can try to emulate a positive expectancy. That's what all businesses are trying to do. Does that make sense? I just want to kind of pause for a dramatic effect on that last comment. The sooner that you can appreciate that, then this is why we're doing this. Rules are boring. They're absolutely bloody boring. But you know what? There's the evidence. They make money. I'm not going to second guess a setup on 10-year notes. Why? Because the data suggests that, maybe you should just put your opinion to one side, Phil, and stop trying to be smarter than the strategy, because you're not smarter than the strategy. Trying to cherry pick trades out of this, if you're less experienced, that's a recipe for disaster, because I don't know which one's going to work. I don't know which one's going to make money. And coming back to your earlier comments, I don't know if geopolitical events are going to impact the strategy. I don't know if it's going to be favorable or negative. And what if I cherry pick that trade out and last week, 10 days ago, and the geopolitical events caused bonds to sell off like a freight train? Well, I've just cherry picked my way out of a profitable trade because I second guessed the strategy, because I'm trying to, in some weird, bizarre way, interpret geopolitical events. A little bit of a nightmare story, Glenn. After the big crash in 2020, let me go to the chart actually, and I'll talk you through what happens when you try to be smarter than the strategy. Again, we have lessons that we learn, lots and lots and lots. And here's the lesson that I relearned. Let's do this. Here's the lesson that I relearned, and why I'm so obsessive over rules at the moment. So up to 2020, there's 2020. There is March 2020, the big crash, as you can see there. So there's March, just so you've got a reference. So for the past 20 years, I've been trading the way that I teach you. And you make money. And, when you have almost straight line moves, you get complacent. So for most of 2019 going into 2020, I've got to admit, I developed a little bit of arrogance in my own trading. I was on a super, super hot streak. Saw the writing on the wall with the COVID thing. It was around my birthday. I remember it well. I have partying hard as you do. And I closed most of my bullish positions for a profit or a loss. There was a mixed results on there. So I cut the least profitable trades and didn't take the full loss and maximized the profits that I did have. I was super pleased with myself. I left my bearish portfolio exposure open and rode that sucker down on that first leg. Now, as price goes below the 200 period moving average, I've got what I call a phase one trend, and I quite literally filled up my boots. I was trading this in real time with all my traders in my community, and we rode this bad boy hard all the way down. And it was amazing. I absolutely made a fortune. Most of my traders made a fortune. It was a great time. Now, the point is, now part two of this act is a tragedy, because I thought my opinion that we were going to retest this low. So this rally here, I thought that was the rally high. I thought that we were going to retest the low, and then I filled up my boots here again for round two of the sell-off. As you can see, that didn't happen because that was my opinion. I refused to follow the data, follow the strategy, follow my rules. I broke all my rules trying to trade my opinion. And it took me several months to unwind all of that bullshit in my head, in my own mind, and turn it around. So it was only when price went back above the 200 period moving average. And as most of you know, my overarching viewpoint is if we're above it, go long. If we're below it, go short. So up to that point, I was like, yep, sell the rally, sell the rally, sell the rally, sell for insert your own expletive, for crying out loud. I can't not be bearish anymore. My opinion is wrong. And that's where it changed around. So it took me a while to turn it around. And then obviously we went long. We know what happens. By October, November, if I can spell, October, November in 2020, that's where pretty much all my accounts went from being kicked in the shins and lots of reds and negatives and losing money hand over fist and losing sleep. That's where that stopped, because I was essentially trading two portfolios. I was trying to unwind and manage wherever possible the my opinion, because that was just trading my opinion. I'm smarter than my strategy. I can forget all the rules. I can be discretionary. I can shoot from the hip. And just neglected to look at the strategy, look at the rules, look at the data. I am not smart on the strategy. So I've learned this lesson a few times over the years. And this is the most recent time I've learned it. I'm very open at it at the time, very vocal about it. So I pretty much gave a good chunk of what I made on the way down back in that silliness, because my opinion does not matter. And this is why I'm so vehemently strong. I don't want to repeat that mistake ever again. I may do it individually from time to time, but I did that on my whole portfolio. And just to compound it, I'd also increase position size at that time. Again, I'm not afraid to admit when I'm wrong. I am wrong. I was wrong. And it's because I didn't have a plan. I didn't have a strategy. I was going discretionary. I went native, however you want to phrase it. But this is what happens when you don't follow your rules, your strategy, your process. To put it in that business context, I decided to sell fidget spinners around about that point. And we all know that fidget spinners are a waste of time. But you get the idea, just being a bit whimsical about it. And hopefully what you should be able to take away from this is not that, oh, yeah, Phil made money, Phil loses money, blah, blah, blah. It's a process. If you don't have a process to follow, or you have a process, more importantly, and in this case, and you don't follow it, then you're going to lose money. That's it. I made money there following the process. Got overconfidence. Ego suddenly went huge. I try to keep it in check, as most of you know. But at some point, you've got to admit you're wrong. Okay, I'm wrong, quite literally, because I decided to think that I was smarter than my own strategy. Now you can hopefully start to see why I'm such, let's say, an arrogant prick when it comes to rules. Follow the plan, follow the process. And it's because of that. It's because of that. So hopefully you can kind of take that away and learn from my mistake. This is a lesson I've learned several times over the years. And this is the biggest time. It's from a monetary point of view. It wasn't the biggest monetary loss lesson that I've learned. But it's certainly from an emotional point of view, this was one of the hardest hitting lessons that I learned. in a 30-year career. And I've learned lots of lessons the hard way. So if you can learn why rules are important, why strategy is important, why a process is important. And as I've said very whimsically in the past here and on my podcast, the strategy doesn't have to be complicated. My first strategy was a 100-period moving average on 15-minute charts. And all I said was, if I'm above it, trade pullbacks. And I was day trading at the time, so I looked for an average day's move, average DM, average day's move. And from below it, sell the rallies in a downtrend, trade the first pullback, and trade for an average day's move. And it was quite literally, that was it. It's the same process that we're using now, just on daily charts. If we're above it, a little bit more strict, because obviously I'm looking for certain things. I've improved on the process over the years. So right now we're below the 200-period moving average. The price is dithering around. Now's not the time to be trading futures. I've got to wait for it to go back above the 50-period. It'll be back above the 100-period. When it's above about 4,600, that's going to be the time to get re-involved in trading futures as per the strategy that I've mentioned. So I'm not trying to trade the war thing. I'm not trying to get a dead cat bounce or some other bullshit, because that's all discretionary. I used to trade patterns an awful lot as well. I'm very good at trading patterns. I can trade discretionary, but the key thing here is that you can't replicate it. And what's more important to me is that you can replicate the type of success that I've been very fortunate to have. Again, I know what I'm doing. I really enjoy helping traders get success. But if you can't replicate what I'm doing, there's no point in me helping traders. I'm just hindering you at that point. So again, just going through my own process, it's a rule-driven, rule process. And I'm trying to get rid of that discretion in my own trading for the reason that I've just mentioned, because I want to be a better trader. And if I'm a better trader and have stricter rules, or let me rephrase, more well-defined rules, then that means that you should be able to replicate that as well. Oh, quick drink there. How long will it take to master the rules? 5 to 7 days. You can. I could spend about 1 to 2 hours with you. You could learn them in an afternoon. The hard part is just understanding the nuances of them. Yeah, to be fair, don't take my word for it. There's several of my members here. To learn the process is different from applying the process. Let's draw a distinction there. It takes a little bit of time to put into practice what you've learned. But do you think someone could be kind enough to just pop a comment in the chat box who has learned my process and just say, how long did it take you to learn the rules? It's a very simple process, what we're doing. The hard part with all things is doing it. You can pick up the rules of golf in an afternoon, but being good at golf takes a bit of practice. Yeah, there we go, Randall. There we go. Thank you very much, Randall. But you get the metaphor. We can ask the same question in different context. How long would it take to learn a successful, to write a business plan? I like to use the business metaphor, but golf, you can learn golf in an afternoon. The rules of golf, yeah, spend an hour just reading the however many golf rules there are. You can learn that in an afternoon. To be good at it, you got to put the time in. Yeah, got to put the time in. Absolutely. Yeah. Again, I'm not going to blow wind in anyone's sail. There is a steep learning curve, but you've got to put the practice in, but it's well worth it. To do the practice, I don't know how long it will take you to get proficient at it. I don't know how fast you learn. So I'm not going to try and bullshit you in that regard, but you can learn this process in an afternoon. To put it into practice, to get good, that could end, at the fastest I've seen someone go from nothing to live trading and getting results is 2 weeks. The longest I've seen someone take the learning curve is about 8 to 9 months. So the only difference being is we'll learn at different speeds. I don't know how you learn. Some people are really fast learners. Some people are slow learners, and it's not because that they're a slow learner. Is maybe you're learning the technology. The gentleman I'm thinking of actually was quite a few years ago. He's a little bit more of an elderly gentleman into retirement. Computers were new for him. Technology, the charting platforms were new. The brokerage platform was new. So there was a steeper learning curve and a longer learning curve because there was lots of things to learn and put into practice other than learning the rules of this system. So two extremes there, two extremes. Where you lay is going to be somewhere in between that. Yeah, you still make, as Randall started, even when you know the rules, again, I'm a product of my own system. I still make mistakes, but I'm trying to learn from them as quickly as and efficiently as possible. And again, the most recent one being the one that I've mentioned. And you can see that why I'm quite strong. Like, create a rule. If you're doing something wrong, if you're second guessing your decisions, you've not created a rule around that part of the process. Again, I'm very comfortable with where I am. Going through that meant that I've created multiple algorithms now. And that's what sent me off. Why I keep talking about the algo, why I keep throwing up these charts. It's to validate the strategy. Am I trading the right strategy and the right instruments for the way that I want to, for what I want? I want as little time as possible. I want my feet up, pipe out, newspaper reading. I don't want to be monitoring stocks every second of the day. We've all got other things to be doing. Some people have got other business interests. That's cool. I want lots of free time so that I can go to the zoo. For example, today, after I finished, I'm going to pick up some friends and I'm going to be having a practice pancake day. So I'm going to be sugar, lemon, butter, all the trimmings. I'm going to have a practice pancake day because it was just something fun to do on a Friday. So, bottle of wine and pancakes. Who doesn't want that? I've got the luxury of doing that. And again, I don't know what you want to do with your extra time. Absolutely. Yeah, exactly. Yeah. It's like a pancake bake-off. That's absolutely right, Randall. But you get the point. It's like we get to choose the life that we want to live. And I'm very fortunate to have had trading allow me that good fortune. I get to choose what I want to do with whom I want to do it with. And again, I'm not trying to brag to say that, but I'm just trying to emphasize like what's possible, what's around the corner, 6 months down the line. What's this going to do for you? You've got my very loosely what my process is. When price is above the 200, the 50 and the 20, go long. You're trying to capture the bits there. And in fairness, if you need some help with that, if you need some extra assistance, then get in touch with me. I do work more closely with traders who need it, who want it, who want to accelerate in that learning fast. I know what I do. I know what I do works. I know that it can be replicated. But if you don't want my help, that's cool. If you just want to come to these free sessions or just watch Trader TV, that's cool as well. But if you want some assistance, just know that it is available. I'm not shy about my commercial intent. Again, I enjoy doing it. I give as much as away for free. Here, I've got hundreds of YouTube videos that talk about all these concepts. But if you want to learn the process and the strategy, you are invited to work with me. If you want to, send me a message. Let's have a chat. Go through the application process. I want to know if what I do is right for you, rather than just sell you something that is not right for you. The example I always use is that there is 0 point learning how to day trade if you don't have time to day trade or you don't want to day trade. It's just to give you that contrast. So what I want from trading, what I teach all my students, is to be time efficient, to get a good return from the markets, so that we can be getting the rewards that we expect from it and have the freedom to do other things. That's the key point there. That's why I'm showing you these photos. I'm doing other things in my life. I'm not sat here just waiting for the next student to come through. I'm not sat here waiting for the next trade. I'm practicing what I preach. And that's what I want for each and every one of you. So if you want some assistance with that, by all means, go to my website. You can go to productionlinetrading.com. You'll be directed to the information page. If you'd like to learn a little bit more about it, you're more than welcome to follow the process, fill in some extra details so that I know a little bit more about your trading experience and what you're hoping for, what you're hoping to achieve. And if it makes sense, we'll work together. If it doesn't make sense, I'm very happy to point you off in the right direction. I say that to everyone. It's a genuine thing, because sometimes what I do isn't right for you. Maybe you do generally want to learn how to day trade. To be fair, I can help you with that. I do have a program for it. I just don't advertise it because I don't want to trade that way. Anyway, with that said, I think that's a good place to land this plane. What was your biggest takeaway today, folks? What was your biggest takeaway? Some from last week. To be fair, do you have any questions? If I've overlooked your question, let me just skip back through the chat, just repost it. And I'll be happy to circle back to a question if I've overlooked it. I'm just going through the... there we go. So just some of the comments from everyone else. The question I asked earlier was, how long did it take you to learn? 2 weeks. The golf thing was a good metaphor. Thank you. I'll keep that in mind. 2 to 3 weeks. Yeah, anywhere between 1 and 3 weeks. You can learn the process very quickly. The biggest takeaway is that I make pancakes. I like that, Glenn. I really like cooking. One of the things that I've been doing in the last 12 to 15 months, I already knew how to cook. I was a reasonably good cook, if I'm going to be honest, Glenn. But I tend to cook fresh every day. So that's one of the things that I've been doing is just enjoying the cooking thing. Yeah, I've got a lot of free time. I can do whatever I want. So cooking's one of them. And Randall, yeah, that's absolutely true. It's a lifelong skill that you're always learning. But that base foundation, it doesn't take long to learn. And what I encourage, like each and every one of you, all my traders, is like learn a foundation that works. And what I would encourage everyone, when you've got it working, that's your base level. If you're ever not sure what to do, that's the foundation stone that everything else builds on. And then you can add your secret blend of herbs and spices. You can add your improvements, the way that you view the markets. You get to add on to my foundation. Like I'll continue to do it. So like my style of trading is my style of trading, but that can be your foundation to have your launch point for what you want to do or a direction that you want to go in with your own trading. And to be fair, for many people, they don't need to do anything else. They just want to plug into a proven system, and that's cool as well. But I've done all the hard work for you, as it were. I'm not seeing any questions that I've already dealt with. I'm not seeing anything get reposted. So I think that's it. That's a great place to circle the wagons, and we'll take it from there. Right. So we'll start the session now. We finished. Thank you. I always say, because it's true and it's heartfelt, thank you for spending some time with me this week. We're on time for a change. We spent an hour talking about the markets. You've allowed me to have a little bit of a soapbox moment from time to time. So again, thank you for that. We could always be doing other things with our life and time. I enjoy these sessions. It's one of the things that I choose to do. I personally, selfishly get a lot from them. And I'm just thankful that you too get a lot from them as well. So thank you very much for that. If you're watching this on the replay and you got some value from it, I would encourage you to like, comment, share it with someone who needs to see this message. And, I would be forever thankful. The last part is put into action what you've learned. Knowledge without action is procrastination. I want you to put into action whatever you've learned or whatever you have had a new perspective on. Put it into action, make it a part of the process, make it a rule, put it into your routine, put it on the calendar, whatever's relevant for you, just take action. Because again, going back to what I said, for several years, I was that I wish person, if only person. I wish that, if only, maybe, shoulda, coulda, woulda. It was only when I started to, you know what, no one's going to do it for me. No one's going to come on a white horse, my knight in shining armor, and help me or do it for me. There's people that will help you along the way. If you want help with it, I'm very happy to, but no one's going to do it for you. So you've got to put into action what you're learning and make incremental adjustments along the way to improve. That's called experience. That's the only thing I can't give you, but put into action what you've learned. And that's a great place to finish. Thank you once again for your time. Thank you for your attention. I would hope that each and every one of you has a wonderful weekend. And remember what we were saying. Where's my fancy? I've got a slide. Oh, I've lost it. Where are we? Seamless transition as always. I would hope that you have some fun. Feed the mind, feed the soul. There we go. Find it. Feed the business. We've just done that today. Feed your curiosity. Feed your curiosity. What are you going to do that's exciting, that's interesting, that's stimulating? Maybe you're going to sit down and read the rule book for golf. I don't know, but whatever you find interesting, follow Alice down the rabbit hole, but feed that curiosity. And what fun thing are you going to do? My fun thing today is I'm going to make pancakes for friends. We're going to have a pancake bake-off. that's my fun thing for Friday. So make sure that your day is involved, has some balance. So that's what I would encourage each and every one of you to do. And if you're struggling for something to do, go and have ice cream. Make sure that there's some ice cream involved in your day. I'd take pictures. Yeah, nice stack of pancakes, Randall. So that was my walkthrough of the markets. You'll notice that we didn't mention the war thing. I'm not really looking out the window. It's not that I've got no compassion for the situation. It's just it's not important to my style of trading. The data says to trade. Generally speaking, war, despite the sell-off this week, war is usually a good opportunity for the markets to behave positively, despite all the weird stuff. And the hard part about what we do is living through the moments of the emotional roller coaster of, is war good? Is war bad? Is the Fed good? Is the Fed bad? Blah, 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 all that bullshit. We make it needlessly hard. What I've hopefully shown you today is that you don't need to look at any of that. If you've got a strategy on a group of stocks that behaves favorably, then you can quite literally just turn off the media, turn off the news. I'm not looking at earnings. I'm not looking at war. I'm not looking at reports. It's of no consequence. And we've just proven that today with the data. So are you making, whatever you're doing, are you making it needlessly hard? If you are, maybe you need to review what you're doing and just trim the fat and just try and simplify it. I can't resist finishing on the last line. I'm just a poor farm boy who figured a few things out. I figured out which buttons to press, and as it turned out, I was pressing them in the right order. So that's what we've learned today. I would wish you a good day, a good Friday. My day is going to involve pancakes. Hopefully your day or your weekend will involve something fun too. And I'll sign off for the moment and have a great weekend, everyone. If I don't see you beforehand, or speak to you beforehand, I'll certainly speak to you next Friday at the next open house. Thank you very much.